Welcome back to Market Fatafat, and let's keep it going with all the buzzes in trade right now. And before that, let me welcome Chandan Taparia, who is joining us on the technical front. Hi Chandan, a very good afternoon, and let's talk about the first counter then, and indeed one of the stocks from the financial space. Chandan, take us through what are you spotting on Muthoot Finance?
Yes, good afternoon. Thanks for having me. Market is all set for the new lifetime high, and we are holding well above psychological 25,000 mark. So talking about Muthoot Finance, the stock has seen the open interest addition of around 29% intraday with surge in the price, and it has given a breakout on technical front. So addition of open interest with price breakout clearly indicates that momentum could continue. So I believe momentum can extend to us 2100, 2120. One can buy with support of 1950 zone.
Okay, so those are the levels coming in for Muthoot Finance. Let's keep it going with all the stocks. In fact, now I want to talk about a sector that is in focus, and the entire real estate space is in focus today on the back of a Morgan Stanley note. Of course, they've picked out select stocks, but let's talk about the space overall. They're seeing that the investor interest in real estate has waned versus what was seen 6 months ago, despite the stock's outperformance on a year-to-date basis. Developers are launch dependent, and valuations seem to be stretched. Yet they remain constructive amid a continued upcycle, and pre-sale outlooks for DLF, Oberoi and Prestige could be slower is what they're flagging off, because they say that all of these companies depend on launches, and the majority of which are in the luxury segment. Investors are now looking at smaller developers like Century Textiles and Sobha. These companies will be benefiting from cheaper valuations and higher sales growth. They also prefer retail landlords over offices, and when it comes to this entire pack, Godrej Properties is their preferred play. Many agree, but questions around lower margin and cash flow remain for this. So on the back of that, Godrej Properties and Nexus Select are two of the stocks that they are betting on from the real estate space. Both stocks as of now pretty flat, but Godrej Properties with a slight positive bias. On the flip side, Nexus with a slight negative bias, down 0.4%. But well, yes, that's the note coming in from Morgan Stanley. They have the real estate space on the radar today.
Well, certainly, but with this, we also spoke with Anro Group's chairman, Mr. Anush Puri, and he cites that cities like Goa as well as Ahmedabad are seeing rapid rise in the real estate prices. Let's go across and listen in to his take on the pricing trends.
Cities like Ahmedabad, Lucknow, Bhubaneswar, Cochin, some of these cities have really done very well. Goa, I mean, that price increase has been very rapid in these. But also, these were cities which were very lackluster, were very sleepy. They were really not on the map of India prior to 2019 as far as real estate is concerned. And these are the cities where now that the talent is starting to work from these cities, and they're enjoying going back to their hometowns and continuing to work from there, that's where the demand for retail, for offices, for residential in these cities has grown. And that's where we are seeing a much more rapid price rise than even in the tier 1 cities. But overall, if you were to look at it, the volumes in these cities compared to the, other tier 1 cities are still much, much lesser.
All right, moving on, let's shift focus to Eicher Motors then, because that's VECV and Baidyanath LNG. They have partnered to deploy 500 Eicher Pro 6055 LNG trucks overall, and that's indeed a positive development where the two companies have signed an MOU, and the launch of these trucks were marked by the flag off ceremony conducted by the Ministry of Road Transport and Highways, Mr. Nitin Gadkari, at the newly inaugurated Baidyanath LNG station in Nagpur. Now, the MOU signifies a collaborated effort to expand the network for LNG stations across locations in central India, and the initiative is seen as a vital step in translating the long-haul transport segment towards cleaner fuel alternatives, and that's indeed a positive news flow coming in for Eicher Motors. An MOU signed with a company as well as for 500 Eicher Pro trucks is what they have already signed for, and the stock is almost flat right now. Not much excitement on the back of this news flow, but incrementally positive for the company indeed.
Okay, so that's why Eicher Motors is in focus today. But Jinay, you've picked out Amber Enterprises for us. Tell us what's happening on this front.
Whereas MBI Enterprises is in focus, as we have a report by Nirmal Bang, who have given an accumulate rating with a target price of rupees 4,300. Now, what they believe is that electronics plus mobility is the growth drivers for the company. If you talk about management guidance, they're expecting the REC industry to grow about 30% in FY 2025. Also, they're expecting the electronics segment is expected to grow about 45% in FY 25 with the EBITDA margins of about 7 to 8%. Also, the order book for Sidwal, which is the wholly owned subsidiary of the company, currently stands at 2,100 crores, while management expects to doubling this revenue in the next 3 years. In terms of scaling up of revenues and making meaningful contribution to overall margins is still couple of years away is what Nirmal Bang believes and is positive on the company. Now, on the back of this, if you look at the stock is currently trading with the gains of 1.6%.
All right, moving on then, let's talk about Lupin, because Chandan, we have been talking about the great moves in the pharma space, and Lupin has hit its all-time high levels. Take us through what exactly are you spotting on this particular counter, Chandan, and where do you see this headed?
So Lupin has seen the open interest addition by around 10-12%. On daily chart, the stock is giving consolidation breakout of last 10 days. But the interesting fact is that it is surpassing the 2015 high of 2129. So 9-10 years long consolidation breakout is clearly visible on the yearly chart. And because of that, the big rally cannot be ruled out. But on immediate basis, I believe with support of 2100, one can look for an upside target towards 2250 and positionally towards 2450 zone.
Okay, so that's the word coming in from Chandan on Lupin. But Jinay, you picked out Sumitomo Chemicals for us. What's the news flow here?
Yes, again, Sumitomo Chemicals will be on the focus because of brokerage note by Nirmal Bang. They have maintained their buy rating and given the target price of rupees 629. Now, the buying rating basically comes on the back of healthy long-term fundamentals. What they believe is that outlook on company's domestic CPC business remains positive with a volume growth of over 20%. Also, if we talk about other catalysts for the company, they are progress in monsoon, 2% growth in Kharif cropped area, which is likely to aid company's healthy pesticides demand. Also, in other monitorable key watches from Nirmal Bang would be India monsoon progress, global destocking, pricing in CPC segment. Also, new launches and regulatory changes for the CPC business will be key monitorable going ahead. If you look at the stock price, currently it's trading about 1% as we talk.
Okay, so that's why Sumitomo Chemical is in focus. But let's talk about HUL. Now, this stock was trading in the red last time I checked, and this is on the back of an income tax notice coming in. As of now, also 1.5% lower is where HUL is. Now, the IT department has issued a 962.7 crore rupee tax notice on HUL, and they've received a tax demand of this amount, which also includes 329.3 crore rupees of interest. And this is coming in from the income tax department. The notice stems from the non-deduction of TDS, which is tax deducted at source, related to a remittance of 3,045 crore rupees made for the acquisition of India Health Food Drink intellectual property rights from GlaxoSmithKline Group. Notably, the notice pertains to the acquisition of Horlicks brand for India from GSK for 3,045 crores, and despite the hefty demand, the company has indicated that it does not expect any significant financial implications, at least at this stage. But despite that, because the tax order is so big in nature, the stock is down 1.5% as we speak.
Right, we're moving on. Let's hear out to big market voice. And while he wouldn't not rush to buy Indian stocks, Mark Faber believes that it's still a better bet than investing in the US. The editor and publisher of the Boom and Doom report adds that he would look towards commodities instead. Let's go across and listen into his take.
Over the next 7 years, the returns on US equities will be negative in real terms, inflation adjusted. That, I think, is quite clear. And I have maintained for the last 20 or 30 years that an investment in India would be more successful than a typical investment in the United States. I think now the Indian stock market is on the high side. I wouldn't necessarily rush out and invest in India. But I think there's some value in commodity markets. I think food prices are relatively low. And I have friends who are very well informed, and I mean intelligent people. They think World War III is going to happen. I'm more optimistic because I'm an optimistic person. I hope that we can avoid it, but obviously, World War III would destroy pretty much all asset markets. That would be a terrible event. And over the next 10 years, as I said, or 7 years, I think if you can just maintain your purchasing power, you're doing okay. And so I still feel that precious metals is a favorable avenue. It may not be the best, but it's relatively safe.
Okay, on that note, we'll step into a very short break on this edition of Market Fatafat. We'll keep it going with all the big buzzers in today's trading session. On the other side of this break, we'll be right back.
Welcome back to Market Fatafat. Let's keep it going with all the buzzers in trade right now. And next up, let's put a spotlight on RVNL, because in the past couple of weeks, it's the second or third order win that is coming for RVNL, and this stock is indeed in focus yet again, because for today, the announcement says that the company has emerged as the lowest bidder for rupees 111 crores worth of project, and that's indeed a positive development coming in for RVNL. And we are seeing the stock did get excited just after the announcement was made, but with a kind of a muted movement that we are seeing in the markets, the stock is also flat right now, but indeed a positive news flow for RVNL.
Okay, let's move on, talk about the technicals now. And Chandan, you put out Bajaj Finserv on the technicals. Now, on a 6-month basis, YTD, the stock is, given single-digit returns, not doing much. So now, what is the view here? Can we expect some speeding up to be seen in the momentum here, or do you think this slowness is going to continue?
Yeah, so I think now the chart setup is changing for the counter after a long time. A major consolidation breakout is on the verge. If I look at the yearly chart, we have seen a narrow range price pattern on the yearly chart, and the last year high is 1741, and we are just 25-30 points away from the previous year's high. If I look at the weekly chart, recently it has completed a breakout from its triangle formation, and which pattern is working well from last 150 weeks. So a major breakout is on the verge, and with this breakout, the stock has potential to rally by 5 to 10% on immediate basis. The stock has been making higher top, higher bottom on the daily chart. So I believe with all these price setup, with support of 1675, the stock has potential to rally towards 1800 to 1850 marks.
All right, that's the take coming in on Bajaj Finserv. But moving on, Tata Tech is the next counter that we will be putting spotlight on. And Jinai, talk to us what's happening with this company, as well as why is the stock in focus today?
Well, yes, Tata Tech is in focus. This company saw 1.3 crore shares, translating roughly about 3.3% stake, changing hands earlier today. Now, if you look at the total block size, it stood at 1,367 crores, with the floor price of the block coming in at 1,027 a piece. Also, this block comes after the PE firm Alpha TC Holdings diluted about 3% stake in the company last week. Also, post-block, if you look at the stock reaction, there was a negative knee-jerk reaction slipping into its day's low. But as of now, the stock has completely bounced back and recovered and trading into green with the gains of about 3% as we speak. Now, if you look at the name of the buyers and sellers, currently they remain unknown, but will be watch out for once the information comes after post-market.
So, well, lots to watch out for Tata Tech on the back of this block deals, and like Jinai mentioned, we'll be getting some information on the buyers and sellers post-market hours today. But let's also take a look at Shilpa Medicare, because this news flow has just trickled in a few minutes ago, and the stock is holding up pretty smartly on this. Shilpa Medicare is in focus because they've announced that they've received the US FDA approval for its second NDA injectable product, which is a bortezomib injection, and this drug is actually used to cure diseases like multiple myeloma and mantle cell lymphoma, which are types of cancer. Let's understand what this nod is. This is the first liquid injection for bortezomib, and this has been approved for both subcutaneous as well as intravenous administration by the US FDA. This injection is ready to use in nature, and to talk about about how this is going to help the company. So this bortezomib injection shall be marketed by Shilpa's business partner Amneal Pharmaceuticals LLC in the US, and the current market for this lyophilized bortezomib in the US is roughly about $95 million. So it's a big approval coming in for Shilpa Medicare, and the stock is also up 4% on the back of this news flow.
Well, certainly it has been one of the outperformers in the pharma basket. But moving on, let's shift focus back to the financial space. And Chandan, the next stock that you are tracking is ICICI Bank. Fourth straight day of gains and very close to its all-time high levels. Tell us, what are you targeting on ICICI Bank? Fresh life highs or any specific target to look out for?
I believe that most of the financial names are likely to do well, positive on the BFSI segment, whether you talk about the Bajaj Finance, Bajaj Finserv, or the power finance companies, or selective name including ICICI Bank and Axis Bank. I believe now again momentum will be there in the Bank Nifty and BFSI. So talking about ICICI Bank, the stock has been making high top, high bottom on the daily chart. In last 4 days, it has recovered from 1165 to 1225 levels and heading towards its lifetime high of 1257 and can head beyond that. So I believe the momentum of higher highs, higher lows could extend the price to higher levels. With support of 1200, we can look for an upside target towards 1260 and then 1300 zone.
So we're coming in for ICICI Bank, but while we're speaking about all of these stocks and sectors, let's also shift focus, talk about PSUs in defense, because speaking about the PSU basket, Pratik Gupta, the CEO and co-head at Kotak Institutional Equities, says that he is bullish on PSU banks after the turnaround that they have witnessed. But what are his views on defense PSUs? Let's go across and listen in.
The PSU space is too broad a brush. There are obviously depends on which sectors they're in. So, for example, the PSU banks, I think most of them have turned around in terms of the balance sheet quality, the asset quality, the credit costs are now under control. They have a much better liability franchise than many of their private sector counterparts. So the PSU banks, in our view, we still think generally quite decent. On the other hand, let's say the defense stocks, the defense PSUs, these are also great businesses from a very long-term perspective, 5-year, 10-year perspective. We think the defense cycle is going to be very strong. But in the short term, these stocks have run up very, very sharply. They've been some of the best performers. So at current valuations, most of these stocks are trading for anywhere between 35 to, in some cases, 55, 60 times 1 year forward earnings. And that we think is quite expensive for a sector where the orders tend to be quite lumpy. Margins keep going a little bit up and down. There's a lot of volatility, and most importantly, this kind of growth in the order book may not sustain after the initial bump ups, and a lot of the forward growth, the next couple of years growth, is already being priced in. So the defense PSUs are one segment where I would say be a bit cautious. Oil and gas, another segment where we would be a bit cautious.
We have seen good amount of a profit booking already happen over the last couple of weeks, or I will say 3 weeks per se. We look at cap goods basket, power basket, defense basket, even the PSU banks basket over there. But there is still a merit to play some of the spaces where the bar of competition is not high. Pricing power is still there, and because of government phenomena of make in India, localization, formalization of economy taking in place, that will even make PSU more efficient from here. So areas like power still have a juice over there, will still keep on doing well. Defense is not purely dependent on India's domestic consumption and import substitution, but also a good export story and China plus one story too. So there is a merit to pick and choose rather than playing this as a pure play basket trade only going from here. But there will be a situation where if this kind of a consolidation or profit booking may continue for 2 weeks or for a month, people may start again playing them as a basket from month of November and December, where we think that third quarter FY25 will be a quarter of demand recovery and will bring back the India earning growth story.
All right, then moving on, let's focus to the real estate sector, and real estate sector stocks will be in focus on the back of the backdrop of Morgan Stanley's latest note. Is that exciting part in the real estate over? What does it mean for the stocks going forward? Let's revisit Nikunj Dalmia's take on the same and listen into him.
that's a judgment call in terms of where the real estate cycle is moving. Now I can argue back and say that, look, the exciting part in the real estate is over. But because of the wealth creation which is clearly happening in the equity market, I guess in the near term the real estate cycle uptrend will continue. So I think there is merit in thinking that the retail dominated real estate stocks will do much better than what really are the so-called non-retail dominated businesses. So these stocks have seen an extraordinary run-up, and I'm not even talking about COVID. Even if you look at, let's say, last 1 year, look at the top names here: Prestige, DLF, Max, Brigade, Loda or Macrotech. Just look at the changes in last 1 year. Prestige is up 200%, whereas Max, it's up 140%. Look at Macrotech developer, up 80%. And I'm talking about the last 1 year. It is not like I'm taking the clock back to COVID. So the run-up has been strong in some of these companies. So they deserve to take a rest, because real estate cycle is not going to move in a linear manner. But within that, if the tilt is more towards companies which have a higher presence in retail and non-luxury, I think there is merit in it. I think everybody is now just blown away that luxury will only do well and the non-luxury will not do well. I think that trade in my book is over.
Alright, that's going to stay coming in on the entire real estate space in the country that has already seen quite some run-up. But on that note, Shrishti, it's time out on this edition of Market Fatafat. That's the end of all the stocks that we wanted to highlight today. Thank you so much for watching.